This is Grant, not with Stated Spark, with NCB today, not crypto, bro. Today, we're starting off, or I'm starting off, without Jarrett or Austin. Oh, hang on. Sorry about just starting on my own today. The guys are both running a little behind. That's okay. There's plenty of stuff to go over in the market. Let me actually drop some questions down here. Let's put this here. Boom. So in the markets today, Bitcoin still under 27,000, 26.9. Ethereum at 1881 for those who don't know, and XRP at 51. Now, one thing the guys and I were talking about, and this is a question to everybody. I'm going to drop this down below, and that is simply this: what in the next bull run? In the next bull run, do you see a 10x on any cryptos? I'd love to get your opinion on this because we deliberated quite a bit yesterday, and when the guys come in, I'm sure we'll carry on this conversation. But we were deliberating on which cryptos, and my position is, and I'll let Jarrett speak for himself when he comes on here. In the next bull run, I do not believe we are going to see, it's going to be a muted bull run, I believe, for most cryptocurrencies. I do believe we'll see a strong Bitcoin, but if Bitcoin goes back to 100K off of its high, that's not even a 2x off of its high because its high was around 60K. I believe it'll hit 100K, and I believe it'll pull back a little bit, but it won't even 2x. I do believe we'll see a bigger move from Ethereum, but its highest was around the $4,000 mark. What's going on, Roger Williams? How you doing? The guys are coming along shortly. They'll be up. What are you up to? And then answer the question here. What's your opinion on this, Roger? In the next bull run, do you see a 10x on any cryptos? And if so, which ones? Here, let me just ping the guys. We're live. Boom. Or I am live just riffing. Boom. So when we discussed this, Jared's position was we'll definitely see some coins 30x. So we looked at the top 20 cryptos and we were going over these and discussing which of these can actually see a 10x, 20x, 30x off of or off of their last highs. Now, I don't think we'll see that big of a pump from Bitcoin. I don't think we'll see that big of a pump from Ethereum. But we got down the list a little bit and then we looked at Cardano. At Cardano's highest, it was around the $3 mark, and it's right now around 37 cents. I think some of the micro cryptos, some of the, I guess, penny cryptos, for lack of a better term, that are part of reputable projects, we could see them go back to $3. We could see them go 10x or see some of those changes in like Cardano, Ripple, VeChain possibly, which is down the list. TRX and XRP. Interesting. I do think XRP for sure could see that. I'm not. Is TRX Tron? Tron. It's at 7 cents. Like it's now at maybe 7.5 cents. What was its high during the last bull run? Let me pull that up right quick, and then I'll actually share my screen here for folks real quick. Let's do that. Let's pull this up. So in the last bull run, Tron was at, let's pull it up here, just bear with me. There we go. So Roger Williams says Tron and XRP, and I do believe Tron. Let's go to all time, 2018. At its highest, we've got a 22 cents Tron, 25 cents, Roger says. Okay, I'll take either one. Those are close. And so right now it's hovering at 7 cents. So this is not necessarily even a 3x play. It would be about a 3x play. I do believe you'll see that from Tron, and you might even see new highs. But what we're used to in crypto is we're used to seeing 10, 20, and 30x plays off of previous highs. And all I'm kind of like thinking about or looking at is that I don't think we're going to see the same, I think it's going to be a muted bull run. I don't think we're going to see the same 20, 30x off of previous highs. We might see 20 or 30x off of current rates. And let me drop this link in here. There we go. We might see some of those. And so those are some of the ones. Tron, I would believe Tron, looking at this right now, 7.5 cents. And Tron is still a stable project. Now, I thought there was some drama with Tron. Oh, thanks, Roger. I appreciate that. I thought there was some drama with Tron and that its founder was under scrutiny. But What's its use case right now? It's a standalone project, but I have heard next to zero news about what Tron is up to. Are there any real NFT projects? What's the use case for their blockchain? What are they doing? And that's another kind of factor on why I believe in the next major bull run, we're not going to see a major push. I think it's going to be largely muted. And on top of that, there's external factors, which I'll get into in a second. That the external factors, I think, are, and when I say external, I mean non-DeFi factors that I think will also cause a muted bull run. But I mean, Polkadot, what's going on Polkadot? It's at five and a quarter, so 5.23 right now, $5.23. And off of its high, let's take a look here. Off of its high, let's look at its chart real quick. Boom. There we go. So its high was up over $50. Now that's pretty significant. And the point that Jarrett has made, and to his credit, they ranked number 11. That's right. Is that most of these are like 95% below their high. Now the question is as you're thinking about the next bull run and as you're stacking your bags, are you hoping for a 2x? Are you hoping for a 10x? Are you hoping for a 30x? Where do you predict it's going? I myself think it's going to be rather muted. Bitcoin will barely see a 5x. Ethereum was at 60. There's Aussie. Ethereum was at 60. I'm sorry, Ethereum was not 60. Ethereum was at 4,000. And I think it could see 8 or 10,000. But what do you think, Austin? Do you think we're going to see a muted bull run in the next bull run? Or are you going to still see the same pump? You're muted, brother.
I feel like Immutable could have a nice run. I don't think Polkadot will. I think IMX will. But Ethereum's going to 10K.
In the next bull run, you think Ethereum's at 10K?
Ethereum's at 10K, no question.
Let me pull up Immutable real quick here. What do you say?
IMX.
IMX. Okay. And what's Immutable's use case?
They're a layer 2, but they're focused especially on gaming and NFTs. So they sponsored NFT NYC, which was really cool. Yeah.
That didn't even register for me. I didn't even realize that. I mean, we were there. I didn't even notice that. So at their highest, Immutable was at, what do we got? All-time high, 930. 930, and it's 76 cents, so less than 10%. Roger says, I think we don't hear about them because the U.S., in the U.S., because they have a huge Asian community. Roger, he's talking about Tron here. Do you know the use case for Tron?
I don't really think... I don't know a lot of use case for Tron. I don't know a lot of users on Tron, and I don't know a lot of people that...
Like actual users. Yeah, correct.
Yeah. I also don't know of a lot of things that are building on Tron.
Yeah, I can't think of a single project that I know of built on Tron. Now, I'm sure that Roger's got his ear to the ground on them. I'm sure he could list off a few, and we could pull up the coin market cap and see a few. Now, Stellar, he says Stellar is definitely a sweeper, and I would even say a sleeper, meaning it's under the radar right now for a lot of folks, and Hedera is going to be huge. I do think Hedera will see some action. I do think XDC will see some action. I am stacking my stacks for that for sure. But, I mean, Austin, we could zero in on a ton of these cryptos, but let's actually talk about this for a second. When Jarrett and I were talking yesterday, I was calling for a very muted bull run relative to past bull runs. What's your position on that?
I mean, I still think we see at minimum 5x's from current prices, or close to 5x from current prices. So, really? Yeah, which is definitely less than the last bull run. The last bull run was a 20x.
Interesting.
Like, Bitcoin hit a $3,000 low on...
Yes.
Before the last bull market.
Yeah.
We hit 60, almost 70. So that's almost like
a 20.
Yeah, it's a 20 some odd X.
And then Ethereum. What was Ethereum's low during that?
Oh, God. I don't even know.
I have the chart. I'll pull it up over here. Go ahead.
A couple hundred, if anything.
And it got up to 4,000. Yeah.
Just over 4,000. There was talks of whether it was going to hit 5, but it never did.
Interesting. Okay, let's
So
see here. I'm pulling
we're
up, and we're talking about roughly what time period? We're
like I'm
talking,
talking by like 20 sometime in 2025, like December 2025.
but going back in the last bull run when we were talking about a $3,000 Bitcoin, roughly when are you thinking about that?
Bottom of 2018, I believe.
Okay, let's take a look. So in 2018, we had a $379 Ethereum, but it got even lower in 2019. We had in 2019 $100 Ethereum. I think even lower than that. I see here an $89 Ethereum.
Yeah,
In
okay. So I wasn't sure if I remember hearing those numbers. I wasn't there for that, but God, imagine being able to set up an Ethereum validator for less than $500, $600. Like it would.
Validator,
Oh yeah,
$85. Yeah, so 30.
$3,200,
Yeah,
$3,200.
3,200. Yeah, and were we even doing validators at that time? And
You
were the
could
require
buy like they were rumored, they were talked about, but yeah.
so from $86? What's up, Jarrett? From $86 at the low to the next bull run, pulling in at 4,600. I mean, that's a
50,
15x.
50,
50?
80 to.
Why are we bad at maths, people? Allison's like, I'm giving up my subscription to the Not Crypto Bros because they're bad at maths.
What is it?
46 the 40 it goes from $86. 10x is $800. You're right. 20x, you're right, Aussie. 20x is 1600. And so yeah, 40 or 50x on
It's
Ethereum.
50, like about 50, almost 52x. So when we think about Ethereum, this time we hit about an $830 low on the
Yeah.
low. So
But
to 10,000.
But so you think right now we're at 1,800. You think we could see a $10,000 Ethereum, and so that would be just shy of a 10x. Let's call that an 8x.
Yeah.
And so that's not bad. So the question is how are people stacking their bags? Are they stacking them with the expectation that they're going to get the 20x's, the 30x? I mean, Ethereum. I didn't realize Ethereum did a 40x in the last bull run. Now, go ahead.
Yeah. Like, I mean, to me, this bull run on Bitcoin and ETH will be more muted compared to, like, we're talking a 12x total from the low, if you were lucky to buy the low. So on Ethereum to potential all-time high. So compare that to a 52x, you're talking it's a quarter or less of the price action. But
Man. Well, I do think the micros are going to
the stock market by 10, 15x. Like,
yeah, I mean they're holding on at 13% a year, and that's probably been muted since the pandemic. Even I think I heard that since the pandemic, the returns and I think also inflation, the returns are less than 13%. I think it's closer to 10.5 right now on traditional markets, or at least how it's trending. But I need to verify that. That's
the number that I keep hearing is 10%, 10% not considering inflation. So closer to about 7% considering inflation.
But to compare apples to apples to apples here, we're talking about annual inflation or annual growth, 10%. These bull runs have gone often 3 years. It's taken about 3 years to pump that far. Actually, I mean, it's getting wider. So like right now, if we look at the frequency, I'm looking at the Ethereum chart. Let me pull this up real quick. On the Ethereum chart, the space from the beginning, roughly the beginning of this bull run to peak, that space only took about a year. Then it took about another year to hit its low, and then it took 2022, like right about there, 1, 2, 3 years to hit that high.
So there's arguments that go on here of also that this bull run, like the 2017 to bull run actually extended out back. It's just
they call it having gone further back.
Yeah, like it's gone. Like they consider that starting in like 2014. Like it's 2014,
Really
2015, 2016
interesting.
kind of thing.
Okay, I mean that might be a fair comparison, like from the low to the high.
Yeah.
And if
So
that's the case, then the frequency might be the same or less if it's going
it's
back to
about it's still about 4 years. We're still doing it on an average of 4 years. And
interesting.
and people say like this last bull market was a little bit interesting because we had essentially the double top, but spread out
Yeah,
because of stimulus money. It was a little
got it.
bit it was a little bit different because we kind of some people called the summer peak in 2021 kind of the that peak, and then that was the start of the bear market. But other people, it gets called slightly differently depending on who you talk to. And
Gotcha.
so, but yeah,
And
we went from a year from the top to the bottom.
now, does this pace reflect the halving to our knowledge, the Bitcoin halving?
Yeah, we're about a year out from the halving, just a little bit less now, and so we're always the year kind of after the top, where that's when we usually hit the low. Like you can honestly, if you were to know the top, sell the top, and then just essentially wait for that same time period a year later. So say you sold in November, like between October and December of 2022,
Okay.
2021 heading into 2022, and you came back exactly 1 year from then and started DCAing
Yeah.
exactly 1 year from then, you would essentially every single time be getting pretty close from top to bottom.
Interesting.
And and then basically wait till October, November, December of the next year, of 2 years from that bottom to hit the top.
Gotcha. Now, Jarrett, when we were talking about this yesterday, you were mentioning that the thing you really are watching is really the market cap. You're looking for like a market value of like 10 trillion. And why is that?
I think the market cap gives you the best indication of like what's actually happening in the overall space. And I think it's something that other people outside can kind of latch onto. And when you crack a trillion, for example, I remember that in 2017, that was like a huge deal. It was like, oh, this crypto thing that they're doing is actually has $1 trillion of value. And then in the last bull run, we went up to 3.1, 3.2, 3 trillion, depending upon where you look.
Yeah.
So I think 10 trillion would be absolutely amazing. It's also 10 to 11 trillion is the amount of gold that's out there. So that would start to be something for
Interesting.
other people to kind of be like, oh, this is actually a real thing. And I mean, I have been listening to a lot of podcasts recently. I'm in Colombia, and when I walk to the gym, it's like 20 minutes. And it takes longer on the way back because we're at about 1.5 miles up and I'm just tired. And I've been listening to a lot of what Bitcoin did with Peter McCormick. And it's just kind of like the interesting thing about it is that, okay, so Roger says he looks at 24-hour volume. I'm long on all these things. So I'm not really looking to sell a lot of my position until probably 2030, 2032, to be honest. So for me, I'm just looking to see how big the space gets. And I feel like that's an indication also of mass adoption on some level and institutional adoption, which I believe we're going to see more. So that's one of the things I look at. I mean, because I could stare at, like, I know the price of Bitcoin at any time of the day. If somebody asks me, I'm going to be 100 to 200 to, I'll be $500 off the price of Bitcoin.
Yeah.
But like long term, I'm just like, the market cap is everything. Because people at the height of it were like, is this real or is this just going to go down? And I'm like, dude, there's $3 trillion in this. You know? It's more than Apple and Amazon stock put together, in the overall space. Now, obviously that came crashing down, but for me, that's one of my biggest indicators.
Also, like 24-hour volume is not, I don't really find indicative of the space. It's indicative of sentiment to me.
Mm-hmm.
As a trader, like my strategies use volume. We examine volume, but 24-hour volume, all it means is sentiment. That's all it is as an indicator.
Isn't that when someone like Roger or myself says an indication of the space, all we're talking about is sentiment, right?
Yeah.
Yes and no, but it's just sentiment at that particular moment. So you could see, like, you might see like volumes drop considerably when everyone's feeling down and low, or volumes right now are really, really low generally because people are just not sure where the market's going. The US debt ceiling agreement was like throwing a huge wrench in the space, regulation. And so you're just seeing lower and lower daily volumes. And because most of that 24-hour volume that we're seeing is especially looking particularly towards centralized exchanges, those volumes continue to drop daily. And
Because
so
exchanges are closing,
exchanges are closing, people are moving to DEXs,
but it's not
perpetual
showing.
options.
It's not showing perpetual dexes or wallet to wallet transfers. Is that what
Yeah.
you're saying?
It's not,
So
most of those 24-hour volume don't track that.
that's interesting to know because in general, I would tend to agree with Roger. I don't think he's saying let's look at the 24-hour volume today, and today is the indication. But the trend of 24-hour volume is to me indicative of sentiment, and sentiment, as we said, is the market. But I think Jarrett's metric of overall market cap. I mean, is that an indication of institutional adoption?
I think that's more of an indication of space maturity. The more money there is in the space, the more likely the space is mature.
Value. Well, and is it an indication that there's more money here, or is it an indication that prices went up?
It's both.
Aren't
Because
those tied together?
yeah,
I don't know. Break it down for me because if Bitcoin's at 60K, because trading's going at 60K, does that mean there's more? There's been an injection of fiat capital. Does that just mean that's where it's selling at?
well, you would have to have an injection of fiat capital because otherwise, if you're selling, if you're trying to sell at 60K, and you bought your Bitcoin at 15, you would need to find someone willing to buy at 60K. And so they would have to have 60K worth of capital to buy your one Bitcoin. And therefore, unless they're magically printing money, like stable coins or whatever, there's no way for someone to buy your Bitcoin for 60K if they aren't injecting capital. If the Bitcoin was originally 15.
Gotcha. Interesting. Well, and all we're looking for is confidence, right? Like as the market goes up, the market goes down, whether it's trillions or whatever. We're just looking for confidence. And I guess the point of a muted rally is, I guess my only point with bringing that up yesterday or even today is like, if I were to advise somebody, you can't compare. George Pate. Okay, George, tell us why. Why can't we?
Why can't I compare Bitcoin like that?
To what?
Yeah,
I mean,
George, be explicit about what you're trying to say. You can't compare. George says, I could plug up over 9,000 miners and make the price do what I want, aka money printing.
Well, I think we need to take that conversation offline because if it's that simple, my brother, like let's go do something. Again, my villain era. But
God.
But
I mean, Grant, there's no way that the market grows without more money coming in.
Exactly. When Aussie explained it,
like-
I was like, wait, no, that's right, because that 60K is not coming from Tron, you know? Someone,
No.
Yeah, there's no way that it grows. And what I was going to say is, George made a comment here about mind. Mind versus non-mind means there's more variables. Interesting.
I mean, there is more variables. Yes, like technically it's not that easy of a comparison because yes, there is mined Bitcoin. But if you consider mined Bitcoin, you're spending money on energy to create that Bitcoin. And so therefore you are investing into the market cap of the space, would be my argument. And yes, mined versus non-mined Bitcoin technically comes from nowhere, no original value, but you would consider the mined value to be a piece of it. And usually when mined Bitcoin gets dumped on the market is usually when we start seeing prices go down because the amount of fiat coming into the system cannot properly collateralize all the basically uncollateralized mined Bitcoin.
Interesting. Jared, what was your thought there?
Well, now I have a new thought. I mean, okay. I want to push back and say, I want to push back and say that Bitcoin doesn't come from nowhere. It comes from exactly what you just said, Aussie. It comes from the amount of energy we put into it through proof of work. And this is something that was fundamental to my understanding of Bitcoin because for a long time, everyone has their journey in Bitcoin, but for me, it was like, well, this is just something that lives in a decentralized global world. It's the internet money. It's something that people can all rally around, and the value it has is the value that the faith they have in it. And I think that's a wrong way to think about Bitcoin. The value Bitcoin has is exactly what Aussie just explained, which was awesome, which is the amount of energy it takes to create a Bitcoin. So if Bitcoin's selling right now at 26.5, but it takes 20,000 to create it, well, then there's the 6,500 arbitrage for the miner. Obviously, they have to cover electricity, they have to cover overhead, they have to cover their capex, as George would say. But the Bitcoin does cost that much. And I think once you start to understand that Bitcoin is backed by proof of work, then you can start to compare Bitcoin apples to apples to something like real estate, for example. How much does it take to create a single family home in America? Okay, then let's look at the profit margin there. What is that going to continue to grow? Where does the supply and the demand continue to flux? And that's a really great point to start to talk about Bitcoin, that like it just doesn't come from fairy dust. Pepe comes from fairy dust, right? Bitcoin doesn't, right? Anything that's a token on an ERC20 token is kind of fairy dust, and it's just kind of funny. And then we'll apply our own social utility to it. Like the Not Crypto Bros token one day will have a social utility because we'll have token gated virtual events, we'll have token gated live events or something. Then there's the social utility, but the actual proof of work and the energy that goes into creating Bitcoin is really where the value comes from. And as the halving happens and more people are trying to basically mine, it's going to become more difficult. Therefore, the price to create it is going to be exponentially more. And that's a fascinating thing.
And then slowly more and more as there's more.
And then slowly more and more. Yeah. So George says, also, the electrical needs need to be clean. Funny because XRP and other coins still run on HPC data centers that run on dirty energy. Bitcoin is like a beta for the rest of the HPC world, trying to prove a different way to make data centers.
HPC.
For the win with I'm not sure what he means by HPC.
HPC. Yeah, George Pate, break that down for us. We could Google it, I guess. Aussie for the win with the explanation. Fairy dust that runs on AWS. That's funny. It's true. I mean, it's stored in Amazon buckets and or the NFTs are.
It's high performance computing.
Okay, got it.
High performance computing. Okay, that makes sense. Have you guys read the Bitcoin Standard yet?
Not yet.
You guys really need to do that. And I was talking to somebody the other day because we were talking about their portfolio, and they were like, oh yeah, Bitcoin, but it was kind of like what we were saying the other day, that Bitcoin's turned into like a boomer coin, and people don't, because they want 100x, and Bitcoin maybe gives you 100x in like 20, 30 years, and they don't want to wait that long. And I just asked, I'm like, have you read the Bitcoin Standard? Because once you read the Bitcoin Standard, you really start to wrap your mind around why civilization is going to move towards it. And then it's like, it was fundamental in my understanding of Bitcoin. To be fair,
I haven't even read it, and everything about why Bitcoin is going to take over the world has been very clear in my mind since I've been, especially in the last 6 months, as I've been really diving into crypto news and all of the economic news going around the world. It's like, yeah, why aren't we using Bitcoin?
Yeah, and the Bitcoin Standard is, well, great. I just want to make one comment, and then please. The Bitcoin Standard is really fascinating because it's broken up kind of in two parts. The second part is really talking about Bitcoin specifically, but the first part, and Grant, this is the part that I think you're going to enjoy the most. I didn't read much of the second part because I already kind of knew some of this stuff, but the first part is the part that, Grant, you're just going to eat up, because it's the anthropological look at the anthropological historical look at how humans basically trade and share value, and where we like to put our value. And it goes from salt to seashells to beads to rocks on certain, huge rocks on certain islands where I always forget the name of the rocks, to diamonds, to cows, to cattle. And when you think about all of these things, they're all just different samples of proof of work. Like a cow in a certain community is a proof of work. Someone's taken the time to raise the calf up to a full cow that can then give milk. And Aussie's a farmer. You can't just create a cow overnight. So in a situation where you're in a bartering system where you're trying to find, because fiat doesn't exist, right? A cow is a proof of work that you could trade to somebody and they would be like, okay, this is really great. Let me give you something else of another proof of work value. And once I started to understand that, then Saifedean builds into why Bitcoin will be the next iteration of that hard money, essentially, or that sound economic energy. I was just sold. I was like, okay, done. And I think that's why, Grant, if you read it, it's going to really align nicely with, I think, the way that you kind of view the world. You talk about the Romans and the Greeks a lot and mythology and how these things even play a role today and how we understand the world. And I think Saifedean does that well in this book as well. So anyway.
So my proof of work is that I bought the book while you were talking, and when you wrap, it's done. It's on its way. It's on its way. You've given me shit enough about this thing that I definitely need to read it. I'll tell you why I've resisted it. Every crypto book, whether it's about Bitcoin or not, starts with, in 2008, the banking crisis happened, and a brilliant unknown man by the name of Satoshi Nakamoto wrote the why. I'm like, shut the fuck up. I get it. And I do appreciate what you're saying about the history of money. Obviously, that's about me. The book called Money, A True Story of a Made-Up Thing. I love that sort of thing. I personally am sold on Bitcoin being the future. But I think a lot of these arguments I struggle with because you're talking about proof of work, and energy is the proof of work. And I don't know if that's a felt thing yet. It might be because of what people are paying when they pay the electric company. It hurts. They're paying $300, $400 a month. But when you say craft, when someone says, hey, I made this pen, I crafted this pen, people can project the work that went in. And the proof of work is the craftsmanship. And there's an empathy that occurs that says this thing is worth something. And gold is the same way. I see the necklaces and I see the gold rings, and there's this cultural norm that we can project the smelting process. I believe the energy coming to your home is such an abstracted process, kind of like, how does a cell phone fucking work? My texts go to fucking space before they end up in your wallet, and it's like, what? Like it's such an abstracted process that we do not value it. We just hate that we and this is evidenced by this. The fact that people hate to pay it. They hate to pay their electric bill. And as such, they don't understand the value of it. They don't understand. And so when the idea, George paid, the idea that people will value Bitcoin because the proof of work is the energy it consumes. Now, philosophically, when a carpenter, it puts out energy. The energy they put out in that craft is what makes sense. They spent hours, days, months on this thing. We still have a cultural understanding. I believe that I believe it's accurate what you're saying. I don't believe the market feels it.
I would disagree because of what we're seeing with renewable energies and the adoption of renewable energies. We're seeing it a lot more. It's upper middle class right now, but even I'm even seeing it in like middle class, or even almost bordering on like the bottom half of society, that are actually, when they're building a home, they're putting on solar panels, or they're putting in geothermal, or they're putting in all of these different basically their own energy sources, because they realize that in the end, being able to produce their own energy puts them in a stronger position and a safer position compared to society. Whether it's saving them, for some, it's the argument of saving money on their electric bill.
Yes.
For some of them, it's when the grid goes down, I'm energy independent.
Yeah.
For others, it's the security of knowing, hey, if anything happens, like I'm net zero for my energy or whatever. And so I'm producing as much clean energy. I'm contributing, producing clean energy for the world.
Yeah.
And so there's all of these arguments, and we're seeing that more and more in the US. when it
Well,
comes
the
to the
argument you're
adoption of.
making is one I fully agree with, and I wish more maxis would make this sole argument and full stop there, because there's an ancient text that says where there is many words, there's much sin, right? And so Grant knows he's a sinner, right? Meaning you can poke holes in something I say if I talk long enough, right? And so I wish maxis, when they were making an argument to someone they were trying to convert, they would stick on this point that you're making, and it's resiliency. It's Bitcoin because of how it was constructed and because it's decentralized truly and it's a world computer. That's more the Ethereum argument, so we should probably get away from that. But it is decentralized and it's not sitting in a bank. And though there are market makers, which someone might counter with, it's largely resilient to the normal manipulations, which makes you as a holder more autonomous. You're more resilient against society because you hold it. So, and the more that people use it and exchange sats, the more resilient you are against outside manipulation, which is what you're saying about solar panels. That to me resonates more with a product market fit than, air quotes for those listening later, than the argument that, look at the energy, it's proof of work. Okay, I guess. And we can inscript ordinals, and it's like, what the fuck? Like, okay. Like, where's the pain? I'm so sick of inflation. Let's talk about something that can't be subject to at least inflation. The Bitcoin can, at minimum, it's resilient to at just that one thing, inflation. Period. Okay, market makers will get it. BlackRock's going to move 10 million in attack. Like Aussie's trading bots got dinged a little bit the other day, and the conversation came up: was there some sort of market manipulation targeting? Well, sure, BlackRock's going to do that one day. So is J.P. Morgan Chase, but it's still the institutions still haven't taken so hard, and they don't know how it moves so well that it's still resistant and resilient relative to the U.S. dollar. Oh, okay, I'm in. Let's talk about that.
Well, you're more resilient not only to U.S. dollar inflation, but you're more resilient in terms of any actions taken by any government, because you have the ability and the means to make decisions with your money.
Yes.
In any way that you want across the entire globe, because not only can not just one government shut it down, no one government could shut down Bitcoin. There's miners in so many different countries, and they can continue. You and I could technically set up a single miner in our house and contribute to the network.
Yeah.
Would it be profitable? Probably not.
Yeah.
Not for all of us. Some of us maybe, but not for all of us. But we could contribute to the network being more stable and decentralized.
Yeah, I still want the anarchic revolution language. Honestly, you put a node in your house. Well, is it profitable? No, but even if it's break even, I've contributed to the revolution. Even if it's break even, I've basically taken. That's one more node that the controlling elite would have to confiscate. And you become kind of almost, if you have an immutable blockchain, it kind of becomes an immutable protest, an immutable resistance, a immutable, revolution. Honestly, go ahead.
So I just want to make sure we're using the right words here. So if you have a miner in your house, then you can get into profit. If you have a node, you're not really, there's no profit there, but it does allow you to be able to run your own, there is some security, and any real maxi does their own node. And that's something George Pate has been wanting to get me on it for a while. Just to kind
What's
of
it take to get a node? Like, we know a little bit about Ethereum nodes. Tell me about a Bitcoin node.
Yeah, I'm not sure. I don't think it's much. I think I need some hardware, and then I just think it's some software, and I just think it's some education. I don't really think it's a lot, but George has been telling me for a long time, until you have your own node running in your house, you're not really, you're too dependent on third parties. You're too dependent on middlemen in a P2P system, essentially. I'm too dependent on Swan Bitcoin. I'm too dependent on, other people, the Prime Trust that Swan uses, Ledger. Right? So yeah, so like everyone in theory should be running a node, and I could foresee a future in the next. If Bitcoin does what we think it's going to do and it continues to appreciate in price and gets adopted and people really want to have it, there's a situation where everyone will have a node, a way to basically be part of the network but it will just be like an app, or it will be something so low key. You know, you'll buy this one thing, you'll plug it in, and then when you do your, Bitcoin, whatever exchanges, you can do it. There's something today on Bitcoin called Wasabi. It does have private actions, and I just wanted to dive into that more because the ledger is so transparent and so immutable. I'm not really sure how it works, but I do think that's something that the wealthy are going to want to tap into in the future. They're going to want to be able to buy a yacht and not, just be kind of pseudonymously owning the yacht, So I don't know. The future of Bitcoin is really exciting.
Wasabi.io.
Wasabi.io or .ai, I have to look for it. But if you just type in
Okay.
Wasabi Bitcoin, I'm sure it comes up.
Okay.
But that's something I kind of want to look into, because I think if you have your own node and you're using something like Wasabi, whatever. And George says, yeah, more node equals less gas fees. That totally makes sense, because there's not the middleman. There's not the person who's getting paid to, secure and basically make sure that the transaction is going.
And
So,
let's put this in layman's terms. Can I, if I will, correct me with this metaphor? When you're exchanging Bitcoin, you're using someone else's app, typically. You're using some other on-ramp, typically. But a node is basically you managing the hardware required to run your own wallet.
that sounds about right. I mean, it goes into a conversation we had yesterday off mic, where you, Aussie, and I kind of got together and we were talking about, Grant and I build websites and we have side hustles. For me, it's a side hustle. For Grant, it's the full-time gig. But like, part of the website that no one sees is, if you're doing e-commerce, being able to create and to receive payment is like a low-key way to have like a very nice little income. And we know this because Visa and MasterCard kind of run the world, right?
Yeah.
And that's all they're doing. And so basically being a node is being your own Visa or MasterCard. It's a way to secure and validate the network. That's probably the best way, I think.
Yeah.
George says to run the wallet and the back-end transactions, it's like an aggregate. Yeah. So I do need to get my own node up. There's so many things I feel like I still need to do to dub myself a real maxi, even though if you saw my portfolio, it's not maxified.
It's V-chainified.
It's V-chainified. It's different. I just haven't sold stuff from 2017. So, but yeah, Grant, I'm glad, if you read that book and you find value, I think there might be a reason for you to ship it up to Aussie.
Yeah,
so
no,
he can get a
totally.
look at it.
I'll
And
totally
Aussie,
do
I have a copy. It's in the States, so I can't get to it, or I just send it. So
All
And,
good.
and with a node, do you house the entire blockchain, or is it literally a processor for future transactions? It's probably the latest block.
yeah, that's something actually I wish George would reply to, and I think that's one of the coolest things about Bitcoin. Essentially, is that even at its greatest right now, I mean, I'm going to Google this, but I think it's still like only a couple gigs of information, which is absolutely stupid.
I think
You
can't
know?
you run them on Raspberry Pis?
Well,
That's
this is
correct.
what
Yeah,
George is saying here.
That's what George is saying. Yeah, it is a Raspberry Pi. Yeah.
Everyone should Pi node right now. And George, I'm going to commit to do that this quarter. I think that this is at minimum a good experiment. But so this is how I correlate this. In Cardano, you could get the Dedulus wallet, the Daedalus wallet, and I believe that itself runs a Cardano node and it's heavy. Like it will actually process. It's not a miner. It processes transactions. You house like a huge chunk of the blockchain or the ledger. I'm sorry, the ledger. So it is a bandwidth hog. The Pi doesn't sound like it is. The Bitcoin doesn't sound like it is. But for some reason, the Daedalus wallet is just heavy duty for some reason. And I think it's just running more information on it. George says nodes are computers that connect to the Bitcoin network and help validate the transaction. So it at least has the latest block, which helps validate future blocks. They don't mine new Bitcoins, but they do earn a small reward for their work. Nodes spread information about new transactions around the network so that everyone knows about them. That's probably the best layman's explanation, which we need, especially because, tying back to this muted rally I'm talking about, I think these are connected. We need to change our language. Now, let me rephrase that. I believe most, and I put this in a LinkedIn post, I believe most of what we call Web3 technological innovation is under the hood architectural. It's someone inventing a new Ethernet cable for the internet, and Susie Q trying to log on CNN, not giving a shit. Like, I just don't care, as long as it runs faster. Right now, the next bull run, I believe, will separate these from who's doing market-facing apps versus who's doing architectural apps. Who's doing market-facing work with Web3? Most of that will be obfuscated into community development and brand and IP and NFTs and kitsch and cool and interesting and wow. But there's still going to be like, and I think Ethereum itself, I think Ethereum itself and stuff like that will largely be architectural. We won't understand what that one protocol and what the hell a node does. And Susie Q wants to get her BTC and her sats. She doesn't care about a node in her house. We do, and we think it's educational. And honestly, for the revolution, we think everyone should. But I think that this is important for us to talk openly about, as people might be onboarding in the next bull run and asking, not crypto bros, do I need a node? Well, it's advisable, but you don't need one. And what is a node? We got to find easy ways, like George just said, easy ways to say, hey, it keeps the revolution going, man. He's even dropping links. George is
on it today.
Yeah, so for those watching, check out his link here, how to secure your wallet, a full node. And I'll look at the Pi node thing. I'll do that.
So I want to call it, this is a really cool moment. George has been asking me for a while to basically create content around getting people on a Raspberry Pi, getting people to use the Raspberry Pi and be able to like basically run their own node. And I know that we have kind of said, and I talked to Allison yesterday too. She's like, yeah, don't have any more guests. You guys are great. Keep the banter. Keep the banter. You know, people don't log on for Not Crypto Bros for the interview. They log on for the entertainment. But I think if George is open to it and George is hearing this in real time, there could be a really cool thing where we set aside an hour and have George on. And we'll need to do a little before to make sure everything's tight. So we're like, you know, it could be even a slideshow that George could put together. But I think it'd be great. He could even show us in real time how to do this. And we could all individually be kind of doing that. That type of content would be super valuable and it would be really shareable. You know, like, if I want to run a node, this is how you do it. And George is a literal professional at this. So George, if you're hearing me, that is something I think we could do. I know that we'll all individually need to get some hardware and you can tell us where to buy it to get prepared for the show. We'll all need to kind of be ready for that. And George, if you can kind of, you and I can work even on a PowerPoint because I think it'd be really good to make it super structured because a lot of this stuff is going to seem heavy, even for the three of us potentially, at least for myself. I'll speak for myself. But that could be something that's really valuable. And maybe that's a direction also where Not Crypto Bros wants to go, where we would bring on people, subject matter experts, SMEs as they would say, to just share this one little thing, you know?
And because people don't talk about this. This is not like, honestly, I didn't even realize that there was Bitcoin nodes. I knew there was Bitcoin miners, and I thought they did all the validating. Like I know a lot about Bitcoin, and I know a lot about Ethereum and everything, but I didn't realize that there were actual nodes for Bitcoin.
Or they are talking about it, and it's unfriendly geek speak. And we need the Allisons of the world who speak in very simple vernacular and make it fun and interesting. And so, yeah, I would do that, George, Jarrett. Let's make this happen. And even if it's a special channel on YouTube or if it's a DAO, for those who don't know what a DAO is, ask Jarrett. It's a digital asset library. He invented them. And even if we have our own DAO for users, just to get access and go, no, simple, simple, simple. And then also us talking about why in a non-geek speak way. In a market-facing reason of, hey, well, for example, like as I think about this, I think about, you know how annoying it is for me to get checks from the bank and for them to validate my funds? And it's like, well, what if you had a node is actually like the front foyer of a bank sitting in your house that just says, no, this money is here, and I can tell other people that you're exchanging with that the money is here, and it's in your house, and it's safe and secure, and it validates everything. So it's just, you know, it's like having your safety deposit box from the bank, but safe in your house. And it's like, oh shit, okay, like we got to find that metaphor. So I would love to do that. That'd be fun.
Yeah, we'll need to work offline to make sure that's tight. So that way, within an hour, we can totally share just crazy alpha. That's one too where we should create a separate event for almost, even if it's on the same Tuesday or Friday, but we really make a lot of hype because I think it's just something that so many people can benefit from. And I think this is the interesting part about tech. I'm not a technical person, but I think what we do talk here, we talk a lot about anthropologically, socially, some of the economics. Like we talk about stuff that floats over the base layer of the tech, but this is kind of getting into that base layer. You know, and it's still so early where we, the Not Crypto Bros, and us individually, we should all try to get a better understanding of the tech whenever we can and not shy away from it. But we should lean into it, and this would be a great avenue for that. And George is so wonderful, so that would be good.
You know what's funny? You make a really valid point here. That's tangential, but I think also important. That we answer this in some small ways like this and really bridge it to layman's terms and make it easy, make it understandable. In an hour, can we show some people how to be empowered just to run their own and why to run their own node? Someone shared with me a video and they said, why does it seem like Gen Z is less technical savvy? Are we just being haters? And the response was no, because Gen Xers went from 0 to 1 innovations, which is a Peter Thiel term, went from 0 to 1 innovations all the time. We remember having to pick up a phone and push buttons or even rotary dial on my grandparents' phone. And then suddenly I had this thing where I had to swipe. What do you mean swipe? It was a 0 to 1 innovation. And I don't know if you guys remember, but this was the real point they called out. We often had an AV class or a computer class. And that computer class might have run on Macs, it might have run on PCs, but it would show you where the folder drives were. And it would show you how to download. And you would do this. Gen Zs were digital natives. They do not have a class on how to use their computers.
They did, at least when I was in high school. They were petering out, but we did have when we were in high school, but that was for a brief few years, and it was not nearly, I think, the level of what you're talking about.
Was it required or optional?
It was for the advanced classes. I was a smart
For
nerd.
us, yeah, for me in like middle school, we all had to take it. We all had to take
it.
how you move the files and do all the back end stuff.
We
And
had
yeah,
to
so
assemble a computer.
Yeah, Grant, I love your
I've
point.
built my
And
own computer twice.
There you go. But also you're an exception that actually proves the
think you're
rule
an
in many ways.
exception.
And I think you're spot on, Grant. I mean, it's like, for example, just how humans, at least I'll just use Massachusetts. Most people in Massachusetts, they don't understand where their food comes from.
Yeah.
You know, most people in the world today, they go to a supermarket and they're so stepped away from the food production.
Yeah.
Right? They don't understand what even a season is, right? We just assume
yeah.
there's always going to be kiwis, there's always going to be mandarins or something like at our local food source. It's
Yeah.
the same thing with Gen Zs and technology. I don't expect them to know how to, do some of these things. Like you said, like rotary phone, like
Well, here
I'm
was
glad
the
they
biggest,
don't have to do that.
Here was the biggest contrast. I remember my grandparents' rotary dial that stuck on the wall, and then eventually where they had like the big antenna one that could go around the house, but that was still push button phone. And then Marissa made this point. She said these kids have gone from the iPhone 4 to the iPhone 14. Not a 0 to 1. There's been zero lift on their required. AI is probably the biggest. And I said, if anything, we had to learn more interfaces. Oh, yeah. They have to learn less. Think of the current shift from Google search to ChatGPT. There's less distractions. It's a single field. There's no ads. You ask a question, it gives you an answer. So we went from our brains had to constantly expand and adjust to more interfaces and understanding the dynamics. They are being asked to understand less and fewer dynamics. And there's been fewer 0 to 1 iterations. And I think crypto itself, the ledger is probably the only thing that has been a 0 to 1 innovation. And could either of you actually describe a block? Most people can't. We touched on it briefly, so you two now at this point might be able to describe what is a cryptographic block. That is the only innovation. The rest is pizzazz, is philosophical. Like, well, what about wallets? Tell me about wallets. It's just exchanging. The only reason wallets exist or are unique is that I've got something called Pepe coin and I want to swap that for Bitcoin because I need to get USD. That's the only reason. Tokens themselves aren't brilliant. I've been playing video games and have had tokens in game since World of Warcraft. That's not new. And so there's very little that they're encountering that's new. Oh, George Pate jumps in. Computer classes were crazy to grow up during the early 90s and 2000s. That era right there is crucial because there are generations that will never get this 0 to 1 experience, and those technologies are still used today in commercial environments, going from learning to type to BlackBerry to no buttons. That was the first dumbing of the senses. Interesting. Relate a block to peer-to-peer torrenting.
There's an idea out there, and I kind of want to talk about that last thing, the dumbing of the senses.
Okay.
There's an idea that because now we can share information super easily, most of what we say like 99% of what we exchange with people is stupid. It's not stupid. It's useless. It's not as valuable.
It's
Whereas when you
carbohydrates.
think
Memes.
back, yeah, well, their memes are like at the far end of what I'm trying to talk about here.
Sure.
But the idea is like in 1500s, 1600s, Grant and I've met, and I know he lives in Florida, and I'm up in Massachusetts. And I want to say something to Grant. I may have to send a courier or whatever, but
You're
I'm
gonna have
only
to train
gonna
a
have-
pigeon to fly
I have to
down
train a
to
pigeon
Florida.
to fly. Yeah, literally a snowbird. And I'm going to send him one. And it may take, let's say it takes a month to get there.
Yeah.
And then he sends it back and it takes a month. We're not talking about dumb stuff, right? We're talking about like high level stuff. So that way we can really break through. We're not like, how's the weather? How's this? We're going
Yeah.
to keep it at the highest level. Like, and I think today, those are the type of relationships I'm really trying to cultivate where
Yes.
I'm having carrier pigeon conversations, because a lot of people that or especially are reaching out to me on LinkedIn, sometimes I'm not even sure if they know what their message is. And then therefore it's like, what are we doing? Right. Would you have sent this to me on a carrier pigeon? If you haven't, I don't know. And I'm really excited actually for the future of some kind of texting platform. And this is actually something George and I were talking about the other day, but like a texting platform where you would use sats. And I know Nostr already exists, so this is kind of there, but where it's like, if I want to, if imagine sending on WhatsApp, if to send a message, it was 1/10 of a penny. Right?
Yes.
So 1,000th of a dollar for
Yes.
every message you sent. Well, guess what? You're going to start being a lot smarter and a lot more strategic with what you're sending. You're not just going to be sending fluff.
I agree. So think of LinkedIn InMail. It will be like this, where when we text, we will like think about the simplest way to stop spam. One of the ways that Elon infused to stop a lot of the spam machines was to throw a very high price tag on the Twitter API. And a lot of companies and organizations flipped out about this. But it did stop, not all bots, we all get followed by Twitter bots, but it stopped a crap ton of bots because it went from costing nothing to costing tens of thousands of dollars to send a spam message. I think you're 100% right, Jarrett. Not only did blockchain bring blockchain-based attribution, so like I threw a hashtag on here that I've been floating the idea of, we're going to start asking or even require through legislation something to be labeled made by AI or made by hand, made by humans. And I don't know how that will play out. But we see a lot of experiments with mirror or lens protocol and stuff like this that's trying to get some, or NFT now, that's trying to get some attribution on what is a well-crafted thought from a human, is what you're talking about. And you're right. I only want to be in relationship with the people who are thinking, and I don't mean dragging out the process, but I mean trying to say something of signal, not noise. It could be like Marissa, she really thinks through what she says. It takes her a while to think. I think very quickly. But I think we're both trying to scratch at saying something of value. And so even, it caught me on a call that we were on with Aussie. And Aussie yesterday, and I hope he didn't take it wrong, he threw out an axiom, some blasé statement. And I said, no. You have to tell me what that thing means. And we were talking about the trading bots. And you broke it down. Oh, you said you're pivoting. And I said, what do you mean you're pivoting? Because like that, we start to not dumb down, but we start to use shortcuts to speed things up. And the truth is no, we're trying to hone our thinking, not dull it. And so what you're talking about is brilliant, actually. That if I did not require that I even got that SAT for that text, I don't. But if I gated it and said you have to pay. And I don't care if you pay into a nonprofit. I don't care if you pay into nodes or miners. I don't even need to see the money. I want you to be required to pay a SAT or a tenth of a cent.
Exactly. It should just cost something. You could say, I'm dedicating all of my stats to this nonprofit, to Mercy Corps. I'm dedicating all of my stats to my own. That's how I'm actually investing in myself. The more I talk, the more I invest long term.
That's right.
Or I'm going to actually pay you. I'm going to pay you for your time.
That's
because
right.
I've long
For listening
thought
to me. We'll
Yeah,
pay
because
you
I've long-
for listening to our show.
No, literally, because this is how, like, I've long thought that, and I've talked about this with you guys off mic, but like I'm very close to creating a token gated thing where in order to get to my Calendly, to get to my personal calendar to talk to me, you have to buy a token, unlimited amounts of tokens, but each token is $100. Because what that is going to do is it's just going to cut out riffraff. Because especially in the last 3 months, and I'll just go back to 2021. 2021, when this started to explode, people, if they knew you were into crypto and you talking about it for years, or they at least knew, hey, in 2017, 2018, Jarrett was being annoying. Everyone started to reach out.
That's right.
And now for the next bull run, I'm definitely going to have that set up for myself, 110%, just to protect my own energy.
And we're doing this with micropayments. We're seeing the rise of value exchange for micro encounters. Micropayments represents, let's at least start valuing. And in some ways, it's like, I gotta make money. In other ways, it's we gotta throttle the simple like the empty carbs of conversation that George Pate was mentioning there. And if anything, I want to get my Twitter subscription up just to experiment with, are people willing to pay? Now, what you and George are talking about, and people need to hear the difference. It's one thing to monetize your subscription, and I do agree with that. But what you're getting at is I think so much more integrated with what the species is crying for when it's crying for micropayments. I almost don't want everyone to listen to me. I want someone to think, like let's just take a Twitter subscription. I want someone to think, I value this enough, and that's a feedback loop for me. Am I creating value? And then it's also a feedback loop for them. It's when you pay for something, you are self-affirming that you value it. They don't even have to tell you. You're self-affirming that. You were smirking at something George said. What were you thinking there?
Me?
Yeah, it looked like you were smirking at a post there.
Yeah, I mean, I just totally believe that this is the future of social media, where we're actually all going to have to pay to not only be on platforms and think and have people think we're real because we're being verified, whether you're verified on Twitter or not. But I also think the future is we're going to start paying for everything in micropayments.
Yes, I agree.
Netflix, I think, is a dead model. This idea of like we're eventually going to ramp up more and more every month, and Netflix is starting to cut it down. So if you have a password grant, you can't share it with Aussie and I because of the IP. You can't even use VPNs and all this stuff. I just think it's going to be like, yeah, you want to watch this show? It's 10 cents to watch this episode. And then they know if you watch the full series, they have 90 episodes, right? Well, there's $9. That's what you would have paid by a month anyways. Oh, and you like all these other shows? They're actually going to get us to pay more, but we'll feel like we have more control and we have more decision and more investment and value. Because 90% of stuff on a streaming service, you don't actually really care about. You don't listen to more than 2% of the music on Spotify. You don't listen to more than 2% or watch 2% of the shows on Netflix. And if you do watch more than that, I hope you're a critic and you're making money off a blog or something, because that's a lot of time. But I do think micropayments and monetizing our attention is really the future of platforms. So,
and I also think
watch to earn.
And that's the other thing I was just going to say. I don't like.
It's beyond that. Yeah, it's beyond that. This isn't earning. It's because it's not earning.
No, you're paying watching for it. No, but it's. I wonder if it's got to be a two-way. It becomes a two-way interaction.
But it doesn't need to be. That's what I'm getting at. For example, art. Art is beautiful, and maybe you just want to create something and people want to just go look at it, like this beautiful 5-minute documentary thing. Well, I can put this up and then all those funds could be just destined towards Mercy Corps. Like there doesn't have to be the exchange, there can be the giving.
Well, there should be a two-way option. There should be an option where on Twitter, you have to subscribe to me to get my content. Or alternatively, if I don't get the money, maybe you don't subscribe to me, maybe there's literally a button that says you need to pony up a sat, something very token that basically signals, I don't need the money. I want you to be sure you want to be here. I want you to be sure that you want deeper thought. And that money then has a play that it goes to whatever, or vice versa. Maybe you do pay and say, hey, for everyone who comes in here, I'm giving a sat. I think it should be fluid. And so whether it's watch to earn, learn to earn, or whether it's watch to get a watcher, and I think George Pate triggers a thought here in me. He says, video game downloadable content started it. What happened to patching and keeping a good product through a good subscription model? I have an answer to this, but before I riff, did you guys have any thoughts, or this trigger any thoughts for you?
I was kind of thinking about, oh God, it was right on the tip of my tongue.
We can come back to it.
Yeah, well, let's come back to it. I'm blanking.
My thought was this: the breaking of trust. I think micropayments is not necessarily our natural way. It is an interesting way and it's fluid. And so from that regard, liquidity and velocity are happening in so many various ways. That's great. But I think the precipitating action was that trust was broken. Meaning I think of a few video games where I had some DLC content. And eventually it just became stupid. They were literally publishing DLC content just to publish DLC content just to keep my payment coming. So I started thinking, well, why am I paying you all this? I only want to compensate you at each micro step that you give something back to me. And so if this is a crap Netflix show, I don't want to get rid of my whole subscription because there is that one show that I really dig. And this other crap, I just don't dig. And so I think micropayments was a breaking of trust to a degree that those benefiting from the subscription, the power got tilted that I'm just going to put out a bunch of junk. And so for me, I think that's what happened to the good old subscription model, which I still believe in. And this is why I think, like on Twitter, for example, there should be options. I should just be able to say, hey, my subscription and set my price, or I should say, no, donate, and just proof of donation, POD, proof of donation just appears in the wallet. And you can say, no, I donated 1 sat over here to Mercy Corps. It doesn't even have to come through me. That's an interesting protocol. Do you know of anything like a proof of donation protocol? That token gains something else? And that's what you're getting at when you say, just buy my token to get on my Calendly. That does need to happen. I think that's brilliant, and I think that needs to happen before we get into the next bull run for sure.
Oh, absolutely.
I'm setting it up 100%. And then the idea is that it will walk someone through how to either buy it with Ethereum or it must be also they could buy it with a credit card. But the idea of just getting them into token gating.
Set it up with Paper. Paper processes credit card payments.
It could be set up
Paper?
With
It's a payment processor that allows you to buy like NFTs and tokens with your credit card.
I'll check it out. Cool. Well, this went a different direction. I was going to talk about Peter Schiff and all this stuff.
Peter Schiff has made me like hate gold-backed Bitcoin. Like this guy must own way too many gold mines to
let it slide. Yeah. But I mean, apparently he's actually not been a hater necessarily on Bitcoin as much as the crypto token fervor at large. But like he spoke at the conference, the link I gave you guys, he spoke at the conference. We could get into some other time. I don't want to necessarily open up a new topic at the moment, but
why don't we leave that for Tuesday? Because I think that's interesting. I think Peter Schiff is also someone who eventually will be a Bitcoiner. It's just a matter of time.
He was at the Bitcoin conference saying he's a Bitcoiner. It's happening.
He's a 23.
That's what that link
blockchain.
is.
Yeah.
I just haven't looked at it. I have to watch it because he's always just said that it's all crap and it's fairy dust, including Bitcoin.
So I've heard rumors that he is potentially part of the original founding group of Bitcoin. So
I mean, he wasn't part of the cypherpunks, so I don't know. But anyways, let's leave that till the next episode. We're already 7-8 minutes over. I'll give some shout outs. Shout out to Mr. George Pate down in Texas. George and I were starting to talk more and, looking into mining, and it's just really exciting to talk with George. George is phenomenal, and we will work with George offline to get something ready for whenever that makes sense, and we all have our hardware, and we're ready to go for that live to figure out how we can all run nodes. So, George, thanks for hopping on, man.
My shout out to two people, Roger Williams, number one, for keeping me company when I started the show alone, and that was my bad this morning. We normally go 10:30 to 11:30. We're going to try to stick to that. Well, I just got into a funky cycle on the calendar today. I apologize to everyone. So my other shout outs to you guys for flexing with me and jumping on early for your schedules to get this thing going. So shout out to those two.
I'm going to shout out anyone who's retweeting our tweets and shouting us out on Twitter. We're trying to be active out there and get this show to more people. So shout out to everyone who's retweeting and sharing.
Boom. All right. Well, folks, follow us on Twitter, YouTube, wherever you find us, LinkedIn. Like, share, subscribe if you want. What are we calling it? Web3 therapy? Intelligence.
Web3 therapy.
Web3 therapy. Intelligence in the crypto space. Thank you all so much for putting up with us today, and have a great one.